Hello everybody. Another week's gone by and it's been a week dominated by numbers. Record highs for the S&P, 2-year lows for the euro, a lot to talk about on earnings as well. So a lot of numbers to look at and the impact they've had on the other assets around them. So starting with the S&P, so it looks like we have risk on carrying from last week. In fact, we've had risk on carrying for a couple of months now. The S&P 500 hit all-time highs. Investor confidence is unstoppable. Everybody wants a piece of it. And why is that so? Well, it's not really surprising, is it? If we look at what the central banks have been doing, the dovishness of central banks recently, that's probably where the explanation is. Towards the end of last year, everybody was going for cash. Central banks were hiking interest rates. There was talks of the ECB starting to tighten up their monetary policy early in 2019, also in Japan, around the world really. And so everybody was banking on that and was counting to make some money out of cash. However, it didn't really materialize, that forecast. And what happened instead is that all the banks went dovish. And the Fed as well went dovish. Bank of Japan went dovish. Even yesterday, we've had the news from there, and it looks like that Governor Ricardo will end a 9-year mandate as the governor of the Central Bank of Japan without having presided over one single interest rate hike. So this is interesting. So what happened is that investors are now going back into equities because cash is not really paying off. So everybody's moving into equities, but also people are looking into fixed income. So going back to the events of the week, we've had some negative figures coming out from Europe, especially from Germany, where we've had the investor sentiment coming under the expectation, the consensus, and therefore the euro suffered. The euro suffered quite a lot. It hit 2 years lows to the dollar. And it doesn't look like it's going to get any better. The situation in Europe is complicated, growth is very weak, and of course we have the upcoming European Parliament election towards the end of May, where we are likely to witness, during which we will probably witness an escalation in political rhetorics, rise of populism, etc., which is also not very good news for the European project and for the euro, therefore. Elsewhere, we've had good earnings for some tech companies. So the Nasdaq doing really well. We've had on Wednesday Microsoft announcing really excellent results. This is mainly due to their cloud business, cloud storage business. Also, Facebook did pretty well. Tesla actually recorded the record losses on Q1, but somehow they managed to turn it around a little bit, and the share price still went up. You go figure. Elsewhere, we had figures coming from Australia, not looking very good earlier in the week, pointing to inflation well below target. So once again, the general theme is dovishness. And the Central Bank of Australia, the Royal Bank of Australia, is very likely to lower interest rates sometime soon. So there you go, general theme for the week. We have dovishness on central banks, but definitely risk on. Everybody is going for equities at the moment. Everybody is parking their money on risk assets, and this is the defining feature of this week. Elsewhere, and to end this week's review, I will say that oil has had a bit of a roller coaster. When the US announced that they are having zero tolerance towards the Iran embargo, price spiked up. But then when inventories came out and revealed themselves to be higher than expected, price went down. So sitting pretty much where it was at the beginning of the week on $66 a barrel. This is all for today, and I'll see you again next week.